Welcome to the Deep Dive. We're here to extract the key insights you need to stay truly informed. Today, we're looking at a really fascinating shift in the crypto space, something that kind of turned expectations upside down. If you, like a lot of people, were getting ready for what everyone was calling a sideways summer in crypto.
Yeah, a quiet period, maybe, a break from the usual volatility.
Exactly. Well, the market had very different ideas.
That quiet vacation definitely didn't materialize for the market, not at all. Instead, we saw this completely unexpected and, frankly, quite tremendous rally.
Absolutely tremendous. So our mission today is to unpack this surge, especially how it was really spearheaded by Ethereum. We want to explore the key catalyst behind it. We're drawing insights from a recent discussion over on the Schwab network to give you a clear picture of the shifting landscape. The real shocker wasn't just a rally, but how Ethereum just dominated it, leading a surge that, get this, captured 50% of the entire CoinDesk 20 index gains. That's a major benchmark.
Half of the gains just from Ethereum's move. It's pretty striking.
Yeah. And the market now feels, as one expert put it, really, really punchy.
Punchy is a good word for it. Definitely energetic.
So what does this mean for you? We're going to dive into what drove this and, crucially, what might fuel the next big move higher.
Well, what's truly remarkable is Ethereum's sheer dominance here. It wasn't just, along for the ride. It led the charge. We saw its transaction rate climb, getting close to an all-time high, actually.
Wow.
And that was driven by renewed attention on stablecoins and also layer 1 blockchains, the fundamental networks like Ethereum itself. That really contributed to its strength.
And importantly, this wasn't just some flash in the pan, right? Not just speculative froth.
Exactly. The rally might have initially kicked off as a bit of a short squeeze.
Okay, forcing the shorts to cover.
Right, but that was quickly followed by really substantial ETF inflows, actual money coming in.
So not just vapor, as they say.
Definitely not vapor. We're seeing real capital accumulation across the board. It signals genuine conviction from both retail investors and that continued ETF demand.
Okay, that makes sense. But it raises a really interesting point. If Ethereum and the altcoins were going nuts, what about Bitcoin?
Yeah, that's the fascinating counterpoint. Bitcoin, during this specific period, went largely sideways.
Really? Sideways?
Yeah. And the analysis from the sources suggests this was because of very large whales, big holders who are often pretty good at calling market tops. They were doing a lot of selling.
Huh. So Bitcoin whales selling while Ethereum rallies. It shows the market isn't just one single thing, is it?
Absolutely not. It highlights these distinct dynamics playing out. It's definitely not monolithic.
Okay, so we've covered this surprising Ethereum-led surge, but the big question is why? What changed? What shifted the mood from expecting a quiet summer to this punchy market?
Well, it wasn't random. There seems to have been a pretty profound change in the overall sentiment. We're seeing this steady drumbeat of positive news coming from the administration and regulators.
Which is a huge shift, right?
Yeah.
Compared to the last few years.
Oh, absolutely. A stark contrast to what felt like, 3 years of a steady drumbeat of challenging, sometimes horrible news. That shift alone is a potential game changer.
So it's the regulatory mood music changing.
Partly, yes, but it's more than just mood. It's this combination of actual structure and reliability starting to emerge. Think about the development of allowing crypto into 401k plans. That's a massive signal for mainstream acceptance.
Huge, yeah.
And then you layer on top of that a series of specific policy actions that are really building comfort and clarity.
So not just one silver bullet policy, but lots of smaller, consistent steps adding up.
Exactly right. Each piece kind of builds on the last one. We've had significant statements like Chair Atkins' speech back on July 31st, or Chair Pham of the CFTC talking about federal oversight for spot crypto trading, potentially under CFTC regulation.
Okay.
There was also that statement from the SEC about liquid staking tokens, clarifying things there. And even the president's comment mentioning 401ks for private equity and other alts, explicitly including crypto. It all adds to the momentum.
Right. These aren't just isolated comments then. They feel like part of a more coherent push.
That's the feeling. It provides comfort, structure, protection.
Which presumably helps companies, right? They can operate more openly.
Exactly. They can raise capital, operate, hopefully flourish. They can reach retail traders and investors in new, maybe safer ways. It helps move things away from operating, under the radar.
Yeah. Puts a solid foundation under the industry.
A good support, yeah. And it positions the U.S. potentially as a leader in this space rather than driving it away.
Oh, and it's not just policy driving this, is it? We're also seeing the big traditional finance players making moves.
Oh, definitely. The BlackRocks of the world, as the source put it, announcing movements of real-world assets on-chain.
Real-world assets. That's significant.
It is. It feels like they're being freed from what was described as a kind of persecution cycle. They can now engage more openly.
Okay, so policy providing air cover and institutions moving in. That explains the rally's foundation. Where does that leave us for the next move, the next leg up?
Well, the consensus seems to be that legislative and administration policies will continue to be primary drivers. The expectation is they'll keep pushing the envelope forward.
More clarity, more structure.
Hopefully. But beyond just policy, the really crucial shift, perhaps the next big theme, is about distribution. It's about moving crypto from being seen mainly as a trading asset class.
Right, something you buy and sell quickly.
To becoming a legitimate investment asset class, something you hold for the long term.
Okay, and this next part, this has direct implications for how you might think about your own investments. We're talking about new products coming out. Multi-token index products.
Designed specifically to help financial advisors manage crypto within client portfolios, so they can apply the same kind of prudence they use for stocks or bonds. You don't necessarily have to be an expert picking individual coins or timing the market swings.
That lowers the barrier significantly for advisors and investors.
It does. And guess where a key place for this could be?
Let me guess. 401k.
Exactly. 401ks could be a great place for that, along with, regular advised money and taxable accounts.
Thinking about crypto right alongside your traditional retirement savings. I mean, who would have seriously predicted that even 5 years ago?
I know. It really shows how fast this space is maturing. It feels like a different world sometimes. But this does raise an important point about education, doesn't it?
How so?
Well, with 401ks, the reality is most people just default into target date funds. They're often not necessarily educated for choices when it comes to alternatives.
Right. Inertia is powerful in retirement accounts.
Very. So the long-term vision here is educating people, helping them understand the potential for what they call huge return convexity.
Meaning disproportionately larger potential upside compared to the downside risk over time.
Exactly. That plus potential tax benefits if you hold crypto for 20, 30, maybe 40 years, treating it like a true long-term investment.
Okay, so 401ks are one avenue. Are there others?
Yeah. The sources also mention the annuities market, the insurance world, other sort of giant retirement-oriented spaces. Integration might even happen there sooner in some ways.
Interesting. So this next giant leg up, it's not going to happen overnight.
No. This will take months or years of building. Infrastructure, products, education.
But it's what the industry is actively working towards right now.
That's the key takeaway. It's a strategic long game, built on policy, built on institutional adoption, and this fundamental shift in perspective from trading curiosity to potentially a foundational investment.
Okay, let's recap quickly. We've explored this really unexpected crypto rally, kicked off largely by Ethereum, driven by a powerful mix, a big shift in regulatory tone towards clarity, major institutional players getting involved, and this growing potential for crypto to become a real long-term investment, not just a trade.
Couldn't have said it better myself. That combination is key.
So the final thought for you, our listener, is this. Considering these pretty profound shifts, the regulatory support, the institutional interest, what does this new foundation really mean for how you think about the future? How might diverse assets fit into long-term portfolios, maybe even your 401k? And what does this evolving relationship between traditional finance and digital assets mean for your own strategy? Something to definitely mull over as you navigate this constantly changing financial world.